ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
You are looking live at the morning show. Good morning, everybody. Welcome. It is March 1st. You know what that means. We got some brand new monthly candlesticks. It's always exciting on this show. We'll talk about that. Brand new guest on the show today. Someone who we have not gotten on before, and there's no excuse for this. No excuse. Mr. Grant Hawkridge, who I guess we're calling the chief data officer or the data czar or the master of the numbers or master of coin at All-Star Charts. He'll be on at 9. Very, very excited for Grant. He's kind of like our secret weapon over here. We'll have Alonso, our chart master, join us later on in the show as he does every Friday. Unfortunately, no Louis today. Louis is out of town, but that's okay. We will still talk crypto. We have to talk crypto. It's Crypto Fridays. So that's the drill. Good morning, chat. Hope you all having a good day. Let's get the show on the road here. Where's my intro?
Ooh, happy Friday, Mr. Spencer. Happy March.
That's right.
We are now in the final third of Q1. That was fast.
It always is.
As you get older, the years go by faster.
What is it saying? The days drag on and the years fly by.
Is that what it is? Is that what it is?
That's what they say when you have kids. Not that I would know.
I feel like it was just New Year's, like 2 seconds ago. We're getting kicked out of the restaurant because my kids are screaming. You know, not kicked out of the restaurant. That's a strong word. Asked to settle down. We were leaving anyway.
Kindly asked to leave.
Kindly asked to settle these animals down. Going out tonight with my local neighbors. One of my neighbors thinks that our wives are trying to kill us. Because when we get together, all of a sudden now my neighbors think that we're in college again. You know, most of my neighbors, like, we're all kind of my age. They all got young kids. They all seem to have partied pretty aggressively in college. And that was generally over 20 years ago for most of us. But when we get together, like, they think like we're back, you know?
Okay. That's fun.
Scary. We're all getting together tonight. Scary thought. Scary
right.
thought. Wish me luck, everybody. Wish me luck.
Good luck, JC. Are you ready? Have you done your monthly ritual?
You know, I got into it yesterday, last night. I did get into the monthlies just because I couldn't help myself. I was a little tired because we did have our big crypto event. So I was tired early. I put the kids down, got myself a glass of wine, put on some music, started going through some monthly charts. Not much has changed, particularly in the monthly candles from one month to the next. One of them in particular does stand out, though, and we're going to talk about now. Why don't you hit that bumper, Mr. Spencer?
They call that a tease.
Ooh. To be clear, I am not clever enough to have done that tease on purpose. It was just generally I was going through the charts and one of them actually really did stand out.
If you say so.
But this weekend I'm going to hit it hard. Dawson knows what I'm looking at. Looking at a little crude oil, really interesting. I'm going to hit the monthly candles hard on Monday night. We got our monthly candles strategy session, which I get very excited for. It's Christmas around here once a month, right? And that's now. So Merry Christmas, everybody. Happy New Year. Why don't we do a quick little rundown? Dow futures down 35 points today. S&P futures flat. NASDAQ futures flat. Bond futures down this morning. All eyes on the bond market. Back to 118 on the 30-year futures. Silver flat. Gold flat. Copper flat. Oil, hello, up 2% on the morning session there for crude oil. After some monthly monster candles over the last couple of months. Dollar mixed in early trading here, slightly higher. Volatility pretty much flat on the VIX. U.S. 10-year yield remaining elevated near that 4.3%. That's what's got my attention for sure. Let's go check in on the funny money. Big event yesterday. Great feedback, right, Spencer? You get a lot more emails than I do. Great feedback on the event yesterday. Bitcoin this morning up 1,300 points, 62,500. How you doing? Highest monthly close ever. I don't know if you caught that one, Spencer. Highest monthly close ever for Bitcoin.
I had to do a double take. When
I had to too.
I didn't see the chart. I saw your message and I was like, that's not right. Oh, he said monthly.
I had to go back.
He said monthly. Oh, it might be right. It might be right.
I went back and I looked and just to double check because I was like, really? Highest monthly close ever? So highest shout out to the Bitcoin, highest monthly close ever. What about the Ethereum hanging out just under 3,500, about 3% on the day. Solana, big winner, big winner. It was the, we're going to talk about it now. It's Crypto Friday, so we'll talk about what that means, the new highs in Solana that we were not getting before. It was missing in action and has now joined the new 52-week high list. Welcome, Solana, to the new highs list. Total crypto market cap, Mr. Israel, 2.25 trillion, on the way to 3 trillion. Question for you, my friend.
Wow. It was just 2 trillion like last week.
It was just it was 2 trillion last week. How long before crypto total market cap exceeds 3 trillion again?
Oh man.
Making it worth an apple.
Yeah.
What do you think? March?
Well,
at the rate we're going, we'll be there next week.
I know. I said Q2 for new all-time highs. That's looking not great. So I'll take the under. I'll say March.
Wow, that's impressive. I don't know about all that, Spencer, but I do think it's coming in the first half. The trend is higher, folks. And what do we know about trends?
I took the over on the Bitcoin all-time high, so I'll take the under on the.
Got it. So no matter what happens, you're still wrong on one of them.
Right, exactly.
Got it. All right, let's talk about listen, not a lot changed from month to month in a lot of the countries around the world. I was looking at a lot of the candlesticks from all of the indexes globally, including the United States. I started with Dow. I was looking at the sectors. Again, nothing really earth-shattering there. Not much has changed from month to month on a monthly closing basis in equities. Now, however, crude oil, why don't you throw that up there? Slide 2, up 2 months in a row. And here, there's a funny thing about crude oil over the last couple of years, Mr. Israel, is that when stocks are under pressure, crude oil catches a bid, right? We've seen that consistently over the last couple of years, right? And then when stocks are ripping, crude oil sells off, right? That peak there in crude oil that we saw, we saw those things happening when stocks were catching a bid. When did crude oil catch that bid? July, August, September. Stocks were selling off, right? Crude oil sold off October, November, December. Stocks did great. Now, here we are coming into the new year. Crude oil is up January and February in an environment that the S&P 500 is also up. Most stocks, have maybe been in a sideways range over the last couple of months, but the indexes have made
up
new
is
highs.
up, all right, barely or not, right?
Up. Well, for the indexes are up. Most stocks are sideways, but the indexes are up. So my question is, has the relationship between stocks and oil now changed and both can rally up together, or is crude oil trying to tell us something? What do you think?
You always say one day does not make a trend. I'll just maybe 2/3 of a quarter also don't make a trend.
2/3 of a quarter is a long time, bro. That's like 60 days.
No, look what happened last year. I mean, you had crude oil rising 4 months in a row, right? And then
crude oil rising 4 months in a row when stocks are under pressure. Stocks sold off.
Yeah, all right. Yeah, the middle of the year. Yeah, okay.
That's my point, Spencer. Try to keep up. That is my point, right? So the question I will ask again, my question is, has this relationship perhaps now changed, or is crude oil trying to tell us something? What do you think?
Can I punt and say to be determined? Because that's what this is, to be determined.
Well, to be fair, I don't have the answer. I'm asking questions. See, contrary to popular belief, technical analysis doesn't give us all the answers. But man, it sure goes a long way in helping us ask the right questions. And this, I think, is a good question to ask. As usual, I don't have the answers, but I think it's a damn good question. What do you guys think in the
All
chat?
right.
Good question or no?
It's a reasonable question. It's a reasonable question to ask after 2 months. Sure.
Sam says JC's still banging the bear drums. I've not been bearish of energy. Quite the opposite. I've been patiently waiting for crude oil to do well. It has
For
not.
a long time.
I mean, look at this base, bro. Look at this base. You know, by the way, coming at that former resistance from 2018, probably not a coincidence. So I see a big base, and if crude oil gets going here, you know, again, I'm looking for that pain trade. What do we know about the market? We know for a fact that the market loves to fool the most amount of people at any given time. And I think that the most painful thing that could happen to markets at this point would be a ripper in energy and selling in stocks. I think that will be the most painful at the moment for the most amount of market participants. And I love that, right? The more pain, the more opportunity. And I think that would be incredibly painful. Like just when people are like, oh, maybe this isn't a recession after all. Oh, maybe this JC was right and this was a bull market after all. Like now that everyone's kind of like now on board with that, now you get the face ripper and energy. I think that would hurt a lot of people. So I think that would be fantastic. So that's
couple comments in the chat that interest me. David Zarling, look at where stocks bottomed the last 2 years. And Dawson, yeah, crude goes higher. Maybe you project out, okay, crude goes higher, rates go higher, stocks go down. Nobody wants that.
Yeah, why don't you throw the next chart? Throw the next chart up to that
All
point. Yep, so there you go. So these have been dancing together. U.S. 10-year yields, crude oil. I continue to point to those yields. My understanding is that, you know, the stock market has been rallying in anticipation of lower rates, right? That's what I keep hearing, but I keep seeing rates going up, you know, making new multi-month highs every day. So I'm just not seeing the lower rate. So I think that's fascinating, number one, that the narrative is saying one thing and then reality is something completely different. So that always catches my attention. And these are moving together. So if crude oil does get going, you think rates are going to be falling in that environment? I would say probably not, right? Something like today, you know, granted, one morning doesn't make a trend, but this has been the trend. So it's more ongoing than anything else. And what do you got? You got rates up, you got crude oil up 2%. Like that's the type of environment that we're in. Rates up, crude oil up. So that's what we're watching.
I'm just going to echo what Dan Russo said yesterday, which is that the bond market makes no sense to him right now. And then,
but he also said that the bond market is not here to appease him either. So
yes, but if it makes no sense to him, it certainly makes no sense to me.
What is it that doesn't make any sense to you? This seems perfectly normal. I don't understand. What is it? What part of it doesn't make sense?
The fact that rates are going up.
Why does that make no sense? Bonds are going down. What direction do you want rates to go in if bonds are going down?
No, I'm not talking about I'm not talking about the bond, the yield rate relationship. I'm talking about the fact that the Fed, because this all trickles down from Fed policy, right? So the Fed has said rates are
does it? Says who? These are 10-year yields. These are not Fed funds.
Yeah, but it all trickles down. It all trickles down, does it not? Okay, whatever. I don't want to get too much into this.
Or trickle up is probably what you mean.
I don't know. It's a dialogue, isn't it? Isn't that what they say? It's a dialogue. It's a back and forth.
I guess, but do you care what these Fed people? What's the guy? The Yellen? Do you care what the Yellen is yelling about?
Well, she's Treasury, but all right.
Whatever. Whoever it is that does the thing.
I don't know.
Do you care what they have to say, or do you care what the
bond market? No, I don't.
Thinks?
I don't care what they have to say. But I do care what the market thinks about what they have to say.
Right, exactly. Well, if 5-year break-evens are making new highs, 10-year break-evens are making new highs, tips are making new highs relative to nominal yielding treasuries, then why wouldn't yields be going up if all of those things are happening? So if the bond market continues to price in higher inflation, why would interest rates not be going up?
What higher inflation?
I'll say it again. 5-year break-evens making new multi-month highs. 10-year break-evens making new multi-month highs. Tips, these are inflation-protected treasury securities making new multi-month highs relative to nominal yielding treasuries across the board.
Tips only work for inflation, for like unexpected inflation.
What do you mean only work for
like tips were terrible in when we actually had inflation. Tips were terrible.
You're not listening. You're not listening.
Okay.
I'll say it again.
Okay.
Inflation-protected Treasury securities, TIPS,
Yeah.
relative to nominal yielding Treasuries.
Okay.
In other words, what the bond market is pricing in for inflation keeps making new highs. And it's not just the TIPS. 5-year break-evens are doing the same thing. 10-year break-evens are doing the same thing. So if the bond market continues to price in higher inflation, which, by the way, crude oil is also making new multi-month highs and they look exactly like those other charts, then why wouldn't interest rates be going up with that? That makes perfect sense.
Yeah. Okay. When you put it like that,
like if the bond market keeps pricing in higher inflation, crude oil keeps making new highs, why would you expect interest rates to be falling in that environment?
I don't know. I guess I just haven't paid attention to the bond market long enough to really have an informed take on it. Right?
We talk about it every day, Spencer.
No. But I've been paying attention to the bond market for like as closely for like one cycle, right? So it's like not enough.
Got it.
Really,
so you're new to this whole bond market.
Yeah.
So, okay. So this is how we want to think about it, Spencer.
Yeah.
Welcome to the bond market.
Thank you. Appreciate it. I'm new here.
Welcome. Shout out. Everybody welcome everybody to the bond market. Come on. Everybody welcome Spencer. Bond market's a big deal, Spencer. It's $130 trillion. I know you come from a world of maybe pot stocks and things that don't actually matter. The bond market matters the most.
That's your opinion, but all right.
Oh, the market has spoken. So it's a $130 trillion asset class here in the bond market. So around here, my friend, we don't trust humans. We don't trust humans, right? Humans can be wrong quite often. Sometimes they're just lying, but they're wrong a lot, right? So we don't trust humans. We trust dogs, right? Got to trust a dog. The dog's not going to lie to you. Trust dogs, and you trust the bond market.
Dogs of the Dow?
No, dogs, like roof.
Oh, okay.
Yeah, dogs, like doggies, puppies,
like actual dogs. Got it.
Like actual dogs, like they're not going to lie to you. They're loyal. Yeah. They're trustworthy, creatures. You trust dogs and you trust the bond market. Humans, not so much, right? Dogs in the bond market, Spencer. It's words to live by.
Fair enough. Appreciate that. Good wisdom.
I think so. Listen, the bond market, it all starts there. You talk about like the Fed and it trickles down. I don't even know what that means. If anything, it trickles up.
A lot of my stocks are dogs. I should be trusting them. Hey now.
So let's throw up slide 4 here. Do you want to do a little crypto Fridays before we bring in Grant on?
Yeah, we probably should.
Yeah, why don't you hit that?
Especially because the crypto just so interesting right now. So let's talk about this,
please. I just want to give a big shout out to the first completed monthly candlestick for the iShares Bitcoin Trust. This is the new BlackRock ETF that is absolutely crushing it. Big ups to BlackRock. Exceeded my expectations in terms of demand for this thing. God honest truth. I came in with pretty high expectations. I'm like, people are going to love this thing. It's opening up the floodgates for institutions. Boy, did I underestimate the amount of inflows that we'd see. Wow, I was very wrong. Like I was right, but I underestimated by so much that we'll chalk that up as an L for JC on that one. So big ups to BlackRock. First completed monthly candlestick for IBIT. What do you think about that, Spencer? How many monthly charts have you seen like this in your life?
Well, it's interesting, right? Because we talk about, and I think about a lot, like ETF launches and the timing of them, right? And we talk about how very often the timing is quite bad.
Yeah.
You saw a lot of ETFs look like this, that were like the bottom chart, that were launched in like 2020, like these growth ETFs. A lot of them look like that, but then they quickly gave those gains back, right? Because they like near top ticked that post-COVID bubble, right? So look, it's only 1 month. It's encouraging. I don't know if it's
It's a hell of a month, though, man. Like record-breaking month. Like you just kind of like skim over. They're like, well, it was just one decent month. Like it was really something.
But it's not so much about what IBIT does as about what the top line is doing, right? And now I haven't looked into this
Well,
enough.
don't you think that what's happening in IBIT is driving the top line for the price of Bitcoin? Like,
Well,
hello.
so yeah, that's what I was about to say. I haven't looked into this enough to really and I probably should this weekend to understand the like mechanics here and if the bottom is driving the top or if the tail is wagging the dog. I guess it's certainly possible for that
Yeah,
for
I
that.
mean, listen,
Right.
something we talked
So
about yesterday. You got two big events, right, happening. You got the ETF event, right? ETF announced for Bitcoin, big deal. And then you got the halving coming up. So when you talk about the halving, like, great. The miners are going to be selling, literally by definition, half of what they're selling now, right? Literally by definition, because they're mining half.
Yep.
But 93%, or what is the number? 93, 94% of
93,
all the
yeah.
Bitcoin has already been mined, right? So you have this tiny fraction of Bitcoin that has yet to be mined. So now they're going to be mining half that. Is it really that big of a deal in the scheme of things? Like, yes, technically is less supply, all things being equal, is less supply bullish for the asset? Well, it's not bearish for the asset, but how bullish is it? I don't think it moves the needle. I think the bigger thing here in the supply and demand equation is not the halvening of the supply. It's the demand side of the equation that now you've opened up the floodgates to all these institutions that were not able to participate in these markets according to their mandates, and they can't just switch their mandate overnight. It doesn't work that way. Now they can all participate, and we're seeing the floodgates open, and we're seeing everything coming through. So I think that when you talk about the ETF and you talk about the halving is so completely irrelevant when compared to what's happening on the demand side of the equation. That's how I see it.
You know what I should have asked yesterday, which is just occurring to me, if 93% of the Bitcoin has already been mined, what's the number? It's a not insignificant number of the percent that is lost forever, right?
It's hard to quantify what lost means. They quantify it by looking at wallets that have been untouched for so long. Like Satoshi's wallet, for example, hasn't been touched. That's why people think he's dead, but who knows? Or people say she's dead, if it's an female. Like, that's always fun to talk about Satoshi as a female.
By the way, speaking of IBIT here, from Eric Bartunas, IBIT now has 10 billion AUM.
Wow.
By far the fastest ETF to ever get there.
I wanted to touch on one more thing, Spencer. You compared, and I would argue incorrectly, maybe irresponsibly, not incorrectly, irresponsibly compared the launch of the Bitcoin ETFs to some of these random thematic ETFs that were launched in 2020.
Yes.
These were like obscure, like, Chinese EV ETF,
or UFO, the space ETF,
like random, like these are like random thematic ETFs that are like cute and people were talking about it and everything like that, but nothing like that was ever serious. This is more like the GLD.
Sure.
Like, this is more like you've got this commodity that's a pain in the ass to buy. You got to do the physical. In this case, you got to go to the blockchain chain, but it's a similar dynamic of an added layer to participate. And a lot of institutions can't do that because the mutual funds can't just buy a rock, or at least back then, right? So that ETF opened up the floodgates for participants to jump in. And if you see the price of gold after the GLD launched, line went up like a long time. That was like the first decade of my career. Line went straight up. Did it have to do with the GLD? I would argue it probably didn't hurt. So I would compare this to more like that versus like a random thematic ETF from 2020. How about that? Would you agree with that?
It makes more sense than what I said. But an ETF launch can still impact. It can still be impacted by the timing, right? Of the underlying market. It can still, you just don't know how, especially in ETFs as large as these are getting huge, right? What else did I say? $10 billion AUM in 1 month.
You like how they call the ETF?
That's bonkers.
The new nine. They're calling it that.
Yeah, I've seen that.
The new nine.
So you just don't know.
I like good alliteration.
You just don't know how these new vehicles will impact the underlying market. In this case, obviously, like it's probably not bearish, but like, well,
we knew it wasn't bearish, Spencer. We knew that. The question was,
but you
how
also,
bullish is it?
Yeah, but we also like don't really know how it'll affect things in like a down cycle for Bitcoin, right? Because we haven't had one.
Yeah, we haven't had one since the ETF launched a month ago.
Right.
Yes, true.
Right. So we just don't know. So yeah, in a rising market, probably bullish. In a falling market, I don't know.
By the way, options haven't even started trading on these things yet.
Great point.
So there's a lot going on, and they're already trading more volume than QQQ and SPY, and there's not even any options activity yet. Like, very impressive, very impressive. All right, go down to slide 7. I think this is probably, I know Bitcoin is getting all the headlines and the ETF and all that stuff. How about Solana making new 52-week highs? Come on, Solana pushing $60 billion, trying to take over the 3 spot from Binance. First of all, the fact that Binance never went to zero in and of itself is impressive. But Solana looking to take over the 3 spot above Binance, only a couple of $1 billion away. Might actually, hold on, let's check. The good thing about the market is that you have a scoreboard, you see. Wow, still about $1 billion away from Binance, Solana. So Solana still holding up the 4 spot, batting clean up here in the crypto markets.
Who's fifth? Cardano?
I think it's Cardano.
Okay.
It's Ripple technically. Ripple. Cardano's just below that.
Gosh, Ripple.
So Ripple is sitting at 32 billion, Cardano 24 billion, and then coming in at the 7 spot, the Doge.
Yeah.
Monster move this week for the Doge. 18 billion for the Doge. Avalanche coming in at 8th, 16 billion. And then, of course, Tron coming in at 12 billion. Then Chainlink, Polkadot, Polygon, Toncoin, Shiba Inu, Uniswap, Litecoin, Bitcoin Cash, Internet Computer.
0 DTE Bitcoin options.
You laugh, but like...
It's coming.
It's coming very soon. Like you say that as like a joke, and it is.
No,
I
didn't say that. Gabriel in the chat said it. It's funny.
No, I know, but like he's saying it like joking, and we're all laughing about it because that is funny. But what's even funnier is that that's coming. That's like really coming.
Yeah. This is our future.
I'm here for it. I'm here for it, guys. Let's go.
Yeah, me too. All right, you want to bring
on? What do we say? We bring in Mr. Hawkridge.
Yeah. So what do we call him, Grant? We call him our master of data, our secret weapon,
our chief Aussie officer,
the chief Aussie officer,
our chief data. Why don't we ask him what he wants to be called?
All right, let's ask him.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, now, Mr. Hawkridge, what's up, my man?
What's going on?
I can't believe it.
I know. How come this is the first time that you come on the show? Too cool? You're too cool?
Yeah, well, I'm not that cool, but it's 1 a.m. 1 a.m. 1 a.m.
on Friday night. You are still rocking. So Grant, so we have been working together for years. How many years have we working together? 4, 5?
Coming up to 4, I think now.
Oh yeah. I like it. I like it. So are you the chief data officer? What does that?
Well, I like the chief Aussie operator. I like that one.
Aussie operator. Ooh,
I like
that. I like that. I was talking with Louis yesterday, and he's in Hawke's Bay, and he doesn't know anything about wine. He doesn't even drink. And I'm like, dude, like Hawke's Bay is like very unique. Like they make Cabernet Sauvignon, Merlot. They got Chardonnay, Syrah. Like they got all kinds of stuff going on over there. You are also in one of the world's greatest wine regions. What are you drinking these days? Oh, Pinot Noir, or is that not enough for you?
We're in summer over here, so I was having a bit of rosé. So I've got a holiday house down in the Bellarine Peninsula, and you got some of the best New World wine from down there. On the weekend that just passed, I was sitting in the garden listening to some live music, sipping some rosé, eating some delicious foods. Can't get much
Rosé all
better.
day, baby. Rosé
Goddamn.
all day.
I want to
I'm
go to
making-
Australia so bad.
Dude, Australia's awesome. I like the Hunter Valley up north of Sydney. The Semillon there for dessert. Ooh wee! It'll
Good
give
wine everywhere
Sarters
in
a run
Australia.
for its money. I'll tell you that much. That's for sure.
There is good wine everywhere in Australia. It's
It is
amazing.
really-
It's an amazing place.
Well, not everywhere. Like in the southeast. Like
Well, yeah, the cooler climates.
yes, there's
But I
some
will say
parts-
cooler climates. Last weekend we were at 100, 105. I got to convert that really quickly to American terms.
No, I
Wow,
hear
that
you.
was
Did it-
very impressive,
That
Grant.
was very impressive. That was very impressive.
Holy
all right,
cow.
All right, so let's
And,
get
and
into
we've
it.
just come into autumn as well. So it's just finished and we're hitting hundreds. So, and we're down south. I'm in Melbourne as well. So there
Good
you go.
juice there. Good juice there. All right, so Grant, tell the folks you're the chief data officer, chief Aussie operator. Tell them mathematically, you cannot have a market correction of any kind without the prices of stocks going down.
Yeah, look, I've always wanted to say this, Alfonso. You need to throw up slide 20.
Side 20.
Slide 20.
Okay, all-star charts, S&P 1500, new lows, breadth dashboard.
There is no new lows.
Not much going on there.
There's no new lows. You can't go down if there's no new lows. It's as simple as that. It's mathematically impossible.
Isn't math great, Grant? Isn't math fantastic?
Yeah, I love it.
Because even if you could be a perma bear and think the world's coming to an end and short everything, you could be a perma bull and think everything's hunky dory, rainbows and butterflies to the moon. We can all agree that you cannot have a market correction without the prices of stocks falling.
Yeah,
Period.
exactly.
Okay, now what about the prices of stocks not rising?
Well, tell them, Grant, can you talk about some of the numbers from December? Essentially, you had everything was already going up. So if everything's already going up, mathematically, you can't have more things going up.
Yeah, I mean, we had those breath thrusts in December. I mean, okay, I don't even have to say it. I was going to say that 63-day new high spike in S&P 500 stocks. Going back all the data I've got, that was one of the biggest thrusts I've ever seen. I mean, you're going back to like 2000, coming off the 2008 lows. So when you got environments where you're getting these thrusts, you're going to see what we've seen coming into 2024 is stocks keep going up and up and up. It's a great tool. It's a great tool. I love breath thrusts.
So let's talk about the rest of the year, right? From a seasonal perspective, election years tend to be very good. First quarter tends to be a little messy, and while the indexes have made new highs, you know, when you look at individual stocks, very few, if any, none of them have been going down. A lot have been going sideways, right? Some have been going up because, of course, if everything's going up in December, mathematically, you can't have more things going up. So that's perfectly normal.
Yeah.
And in the year, do things really start taking off? Is it like April, May, or is it like after that? Like, what is that sweet?
At the end of this month, if you look at our seasonality work, at the end of this month is where it starts, you know, kicking off. What's interesting that I found was in a period that was weak over in February, stocks just didn't even care about seasonality cycles. They just went straight up. So what I'm thinking about now is when we start hitting those periods that you've got the tailwind of seasonality and cycles, what is stocks going to do there? Like, are they just going to keep going up, or are we going to get, is it sort of off cycle? Are we going to move to the side and see a bit more of a pullback now? That's sort of the questions I'm asking myself at the moment.
I have a good question for you, and it's something I think about a lot. You know, and you do this yourself, and I've always been like, yeah, take it out. I want to see the absolute numbers in terms of subtracting the new lows from the new highs. Explain to me the thought process of, if we know for a fact, and you did an excellent job, that visual that you brought of no new lows is fantastic. If we know for a fact that there are no new 52-week lows, there's nothing happening there, then why on earth would we want to take a number that is important, which is the list of new highs, and subtract nothing from it arbitrarily? You know what I mean? Like why are we trying to build a snowman in the summertime over here with the new 52-week lows list and we know there's nothing there? Seems to me like
I
look
totally
at
understand
one,
where you're coming
look
from.
at another. You know what I mean?
I totally understand. But a lot of my the way that I view the market, I've learnt from other big professionals. You had one of the biggest, Mike Hurley,
Yeah.
recently on.
Yep.
He uses net new highs. So you know what? I'm going to start using it.
Yeah.
But I do understand why you're saying, like, if there are new lows, why do you put it in
For the
there?
record, I asked him this question too because I was on the phone with him a couple of weeks ago. I don't think we mentioned this on the podcast on the show. He agreed. Like he looks at both, right? I think there's a time and a
JC,
place.
we look at everything. I mean,
Yeah, we look at
how many
everything.
charts we go, how many chart decks that I put together, and we're looking at all the sector data. We're looking at, I mean, even you go, show me the biotech new 21-day highs. Here it is, JC.
Yeah.
We're looking at everything. We're looking at everything.
No, it's a good point. Like when we talk about looking at different countries around the world, do we look at them in local currencies or in US dollars? The answer is both. Do we look at equally weighted indexes or cap weighted indexes? The answer is both.
You look at
Do we
both.
look at, right. So that's a fair point. I would argue that the new 52-week highs minus new 52-week lows, in other words, the net new highs list, is probably more informative in range-bound markets, right? Where we're wondering which direction it's going to resolve in than it would in a trending environment. Like, for example, if the market is collapsing and we're just new lows are expanding and we know that there's nothing happening in the new highs list, why on earth would we use that as the formula? Just like, now the indexes are making new highs or they have been for quite some time. We know there's nothing happening in the new lows list. Why would we include that in the formula? Seems to be more advantageous in a sideways environment to run those numbers that way. And that's where that particular ratio would be most informative. No?
That is true. But I mean, this is going back to, I learned from Mike Hurley. That full day, that warning sign, this is a great tool when you just all of a sudden, bang, new lows pop up. That's going to be showing right there on that chart. Like, that's one of the charts I look at every day, and it's going to go bang. Okay, because I wake up, the market's closed, so I miss all the garbage.
You're
It's
better
great.
off.
I love
You're
living in
better off,
Australia.
Grant. You're better off.
Oh, 100%. I wake up, market's closed. I can look at the market with, nothing, no silly noise around me. I can sit down, I can dig through the data, I can, put everything together, no noise, no bullshit, and we're just at it. So
yeah, I encourage everybody.
That's why I like that chart is to get that sort of that full day, that warning sign to say, hey, we need to start questioning the market here. At the moment, we haven't seen that at all. I mean, you saw that other chart, the table that we showed. There's no new lows. So,
no new lows. I would throw in high yield bonds in that conversation as well. High yield bonds, consolidating sideways. I think an expansion in new lows would likely coincide with a breakdown in junk bonds. Would you agree with that?
Yeah, I mean, there's 101 ways to look at the market, isn't there? With especially the bond data. I mean, it's important data that you need to be looking at. Like, it's the biggest asset class in the world, So you need to look at it. But I tend to look at sort of bond data as in ratio form. So I want to get high yields to treasuries and see what's going there. Is there risk on? When it comes to me,
but you're not going to.
And my approach, I want to see what the environment is.
Right, I know, but Grant, you're not going to get a widening of credit spreads without high yield bonds breaking down.
Breaking down, yeah, exactly.
Right, so it's just like what you're saying is, I'm more interested in the spreads themselves versus junk bonds on an absolute basis. Agreed.
Yeah.
I couldn't agree more. I'm with you on that. Now, if you reverse engineer what that formula looks like, in order to get a widening of credit spreads, you're going to likely need junk bonds to break down. A breakout in junk bonds likely means that credit spreads are narrowing even further.
Narrowing even more, yeah, exactly.
Right, so that's sort of how I'm thinking about it. Credit spreads as tight as they've been, nothing happening in sovereign.
Yeah.
In sovereign credit spreads
There's nothing.
as well.
I mean, they're right down the bottom. I look at them every week, and they're just hovering down the bottom there. There's no stress. I didn't bring the chart, but I use a Fed financial stress indicator that we use, and that's just at the bottom. It's
Now-
nowhere. It's
now here's
there's
what-
no,
now
there's no
here's-
stress.
Now, here's where we are seeing certain things in the bond market, and that's an inflation, right? So while there's no stress in credit spreads are as tight as they've been in years, right? Have been. It's not anything new. We are seeing tips outperforming nominal yielding treasuries, 5-year, 10-year break evens. U.S. 10-year yields
yeah.
also pushing away against new highs, and you're seeing crude oil following. So what is
That's
the
a big
bond
one. That's a
market
big one.
pointing
Crude
to
oil.
there?
Crude oil is a good key there. I think is one you want to be watching. Is that going to keep moving up higher? I mean, it goes alongside with the dollar as well. What's the dollar going to do at the same time? Because that's going to obviously affect stocks there because the correlation's been so high of recent. So yeah, it's been an interesting market. It's
Always.
I've enjoyed it.
Always.
I know you enjoy it. You know.
This is what I do, Grant. This is what I do. You know, I might not be the chief YOLO officer. I got my hands in different pots, right? You know, I was definitely more defensive in equities coming into February. We had a banner year last year, so I'm trying to hang on. You know, also I think that's something Sean said really is, you know, kind of struck with me coming into the month. He's like, you know, we got a lot of long positions on and a lot of things that have been working, and you know, putting on some hedges. You know, putting on some bearish positions to sort of tilt that a bit, you know, really made a lot of sense. Certainly helped me sleep a lot. You know, especially the exposure we've had in the crypto markets, like, wow. So, you know, even though I was more defensive in the equities market, you know, things have been going really well. So you know, you're kind of like a little bit uneasy because when things are going well in my 20+ year career, when things are going really well, it's probably not as good as you think. And when things are going bad, it's probably not as bad as you think, right?
Did you see The Economist with their magazine cover yesterday coming out?
I did. It wasn't bearish though.
Oh, it depends if you got a pin.
What do you mean?
That one. Yep.
Yeah, you got that on the screen. Yeah. So it says, how high can markets go? Like, it's almost like The Economist is questioning.
Yeah,
like,
well, yeah, you can take it like that, I guess, as well.
This isn't a bullish magazine cover,
No, it's bearish.
right? So that's good for equities, no?
I mean that's what I was saying. Like, I mean, we're saying that everything's, you know, going up and up and up. You want to hedge. This is a great. I mean, everyone's putting on hedges. You know, is this going to be the top? I mean, you're not. You can't
This doesn't
really
look like a
magazine
toppy
cover, and then, you know,
this isn't a toppy
cash
cover.
out completely. But it's an interesting data point.
The data point, in my opinion, is that this is not a toppy cover.
Okay.
You think it is a toppy cover?
I saw it and went, "Ooh, okay." I mean, the whole of Twitter's made it a toppy cover because it's everywhere now.
Yeah, but you think? I mean, The Economist is questioning the strength. They're not like saying how strong the market is. They're like, can the market go? Like, this isn't like they're not being bullish. They're like making fun of the bull. Like, it takes all these balloons to hold it up. Spencer, can you chime in here?
Well, I have a question. I don't read The Economist, but is it indicative at all that 3 of those top 4 headlines up top are about global markets, right?
No,
China.
we're interested in the art.
We're not interested in the headlines above it.
I'm
China,
not.
China, India, Russia.
It's all about the
No?
visual.
All right.
No.
Okay.
I'm interested in the art. I want to see
this
where
is
they're
not
going.
this is not a bearish headline. This is not bearish for the market. This
I don't think so.
This cover.
I don't think so at all.
Yeah.
Do you, Grant?
I mean, if you got a pin and you start, you know, pop.
No, but that's what they're insinuating.
This is not a toppy. This is not a toppy. A toppy cover is like can't stop, won't stop, right?
Yes,
like
yes.
like
Hey,
that,
Or if you put like the one that we had about the dollar.
Hold on. I'll show you guys what it looks like. Can you throw up slide 8, please? This is what turning points look like. Come on. Not the bull with balloons. This is what a turning point looks like.
right.
This, my friends, is what the environment looks like when things are changing. These were the covers in November in the fourth quarter of 2022 as the stock market was bottoming, as cryptocurrencies were bottoming, Bitcoin was putting in its bottom. This is what that looks like. The one that we just got from The Economist ain't that.
Yeah, okay.
Right?
Well, yeah, well, there's a lot more color on that Economist one, so these ones are a bit more doom and gloom.
That's true. Yeah,
The
they're a little more
fall
drab.
of the crypto empire, like the Bitcoin bottom, like that day, I think.
No, okay. In fairness to Bloomberg, they were not making a point about crypto. They were making a point about FTX, which they were totally
That's
right.
not the point. That's not the point.
Okay. All right. Fine.
Okay, what about crypto's downfall with like?
I'm not defending that one. I'm just defending the one in the middle.
How about searching for returns? That's a good one. Come on, this was all at the same time, bro.
I know. I was there. All right.
So good, so good. Grant, what do you like? What are you buying right here, right now? What are you doing?
I was actually looking at CAT. CAT. I mean, I actually got two that I'm looking at, and one actually a short. If you want to hear about the short.
I want to hear about longs and shorts. I want to hear about delta neutral trades. I'm down for whatever. I'm down for the get down.
I like CAT. I like CAT.
CAT long.
CAT. Yeah, there's a big fib there because obviously at end of month you go back and look at the those longer term trends. And I think it was about over I think it was 310 and the fib extension out to about 450, I think it was.
Yeah.
So those levels were screaming at me.
Not to mention the industrials have been the generals. And I've been saying that. It's not tech, it's the industrials. You think Germany and France and Denmark are making all these all-time highs because of technology? No.
Small cap industrials, they're just absolutely tearing.
The best chart is small cap industrials relative to small caps.
Oh, it
tells you everything you need to know.
Parabolic. Yeah. It's an amazing chart.
That's right.
Amazing chart. So
all right, what do you like short?
It's gold stock.
Which one?
Newmont.
What a hot piece of garbage this thing is. You want to short
rubbish.
Newmont now? It just lost 30%. Like, it's down 30% for the year. You want to short it now?
If it breaks that level that it's at the moment, it's going down. It's going down. It has to.
Well, it doesn't.
I mean, all the gold work that I do.
I know, but we're back at those 2018 lows. Not that I'm defending this hot piece of garbage. I'm just playing devil's advocate here. Like, this thing has literally lost 75% of its value in less than 2 years. It's down 30% just this year alone. It's back to support levels from 2018 and 2016. I'm not saying you're wrong. I'm saying it's a little extended here. So it's got to break what, are you saying?
You're saying break that support. That's what
Which
you're saying.
support?
That support. If it's below that support level, it's going lower.
29, 30.
Yeah, so 20. I said I was 29, and I was sort of, I mean, this is way out there, but you're going down to those 2015 lows at 16. If it breaks below that. I mean, as you said, it's very extended here, so you gotta watch it. But if it's below 29,
let's reverse engineer what that looks like. If the blue chip, which is hilarious, if the blue chip of gold, let's see, Newmont Mining. Any guesses on the market cap? Who wants to guess? It's way bigger than I thought. Anybody want to guess? Market cap, Newmont.
34.
Go. What is it?
Billion. 34 billion.
Oh, you knew.
Of course I know.
Of course, because you're Australian. All you Aussies and Canadians love their natural resources.
Oh, we do.
Right,
Our whole market over here, everyone's whinging about it is not going up. It's because we're so commodity based.
Well, think about it. If Newmont's going to break down to new lows, right, and gold is going to fall apart, what are real yields and the dollar likely doing? Up, right? Up.
Which is not good for stocks in general.
Which is not good for stocks in general. It's certainly not good for gold stocks.
Yeah.
I'm not going to mention any names, but one of these gold bugs who's just been so wrong for so long, like it's just embarrassing at this point, was talking about how people are selling gold stocks to buy the Bitcoin ETF. And I'm like, bro, people buying a Bitcoin ETF can't even name a single gold stock. Like, it's not even on the radar. Like,
not on the radar.
Oh, it's not even on the radar, dude. But if you're right, these real yields and that dollar up and up and up.
But once again, it's one trade. You got your risk management in place. If it doesn't work, it doesn't work.
Well, it hasn't even broken down yet, so there's no trade.
Yeah, it hasn't broken down, so I'm not in that trade. It just
Right.
looks appealing to me because it's a massive topping formation.
Listen, I'll tell you where I'm at. I've been waiting for a breakdown in Apple below 180 to get short. That day might be today. I've been sitting here waiting patiently. In fact, I've actually been pretty impressed that Apple hasn't broken down. And here we are trying to break 180. So I could be going into the weekend short Apple, which would be very exciting for me. Shorting Apple. Not sure what that means for the overall market or the NASDAQ. So right here, front and center, Apple 180, not breaking down has been very impressive. So I would argue if it does break down, it's the opposite of very impressive.
Just a random question here. With Apple being, pulled back there in price, is that because over that 21 period where it peaked and then the market went bearish and Apple was seen as cash, essentially? A lot of people just piled in there because it was a safe haven at that time. Is it now getting pulled back because they're taking that cash out and putting it into the rest of the market because there's better opportunities elsewhere?
Well, there's one person who uses it as a cash, and her name is Kathy Wood, and that is she said that, and that's fine for her. As far as Apple being cash, no, I don't buy that at all. I think Apple is a very widely owned stock. Specifically, has nothing to. It's the opposite of cash. I think it's really just an interest rate story, right? The bond market's been crashing all year. So Apple has sold off in sympathy. It's more of an extension of the bond market, if anything else.
Yeah, okay. I like it.
Yeah. I definitely don't see it as cash. I think it's more of an extension of the bond market. So for Apple to be saved here, for money to rotate back into technology, I think you need to see rates rolling over, right? I think that's what you need to see. We haven't seen it. So that's front and center for me.
It's an amazing time. It's an amazing time.
Best, give a wine recommendation close to you, close to Melbourne. Give everybody a wine recommendation. What do you like there?
Look, if you want to go to my favorite, I like a Scotchman's Hill Pinot Noir. I could drink that every day.
Scotch and teal?
Scotchman's Hill.
Scotchman's
Hill. What kind of wine is this?
Scotchman's Hill, Bellarine Peninsula, Pinot Noir. Oof, amazing.
Okay.
All right. I like it. I'm just not drinking enough Pinot Noir these days.
We drink too much of it down here because it's a lot of our grapes are Pinot Noir.
Yeah, but it's also summer for you. We're in the dead of winter in the Northeast here, so Pinot. I'm going a little bigger these days, than a Pinot Noir. But all right,
warming up. You need to warm up.
No, I'm going to start drinking more Pinot Noir in the spring. I'm going to make it a point, and I'm trying to get more New World. I drink way too much Italian and French wine. Like I have a problem. Like I have a serious problem. Everything I drink is Italian or French, and I don't like it.
We should do some sort of swap. You send me some, and I'll send you some, and all good.
I'm just disappointed. I feel like guilty about it. Every time I open up a Barolo, it's like another Barolo, JC. Come on, buddy. All right, Grant. I love you, brother.
One of these months, we're going to launch JC's wine show. I don't know which month, but one of these months.
I like it.
Grant, this took way too long. It was a pleasure to have you on. We definitely need to get you back on.
Thanks for having me, guys. Amazing.
Go get some sleep, all right? Or don't.
Yeah, I know. I got an early tea time at the golf course tomorrow. So
animal, dude.
I've got about 5 hours sleep
these days. What is it?
I'm playing off about 18. I'm playing bogey golf.
You're playing bogey golf. That's exponentially better than me. So good for you. We'll play in Napa when you come up. We'll play in Napa.
100%. I'm down.
Maybe you and Strazza will play and tell me about it. We'll see. All right.
Love it.
Someone in the chat asked, "Oh, do I get Grant's charts with All-Star Charts Premium?" That's kind of the point. Yeah, you do.
Yeah, Grant has great charts. And something he said gets understated about how when he wakes up, the market's already closed. One of my favorite experiences of being in Asia over the years, and I traveled all over Asia a bunch of different times, you wake up and the market's closed. It's fantastic.
Or close to closing, yeah.
And let's remember that closing prices are the most important prices. And that was something that Charlie Dow taught us 140 years ago almost. And when you wake up, you already have those closing prices. So you know how a lot of times, like me and Strazza arguing, he's like, well, the market's ripping this morning. I'm like, bro, the market hasn't even opened yet. Let them dance. You know how I say that?
No.
Well, if you live on the other side of the world, you don't have to let anything dance. The dance is over.
Yeah, but he's talking about from 8 p.m. He's talking about like the start of the future session, and so it's been ripping. By the time we get on here, the market has been open, for like 12 hours, right?
Yeah.
So
Yeah. No, I mean, I'm with you. But
and for the record, for the record, I'm in Steve's camp here. I very, very often will come in and look at and see what's happening at 6 a.m. and say, "Oh, we're ripping. Oh, we're getting crushed." Right?
Yeah.
Yeah.
I've been emotional that way in my early years, and I've learned to let them dance, Spencer. Let them dance. Listen to Charlie Dow. He had a lot of wisdom. Journalist from Springfield, Massachusetts, that one, Charles Henry Dow.
Yeah.
Kind of a big deal.
Yeah. All right. Listen, surprise guest. Actually, I forgot to mention this off the top. I did tell Mr. Kenny Glick that he needs to come on, or I didn't tell him he needs to come on. Told him he could come on.
Bring him on.
And because he was on a couple of weeks ago, maybe three weeks ago, talking about speaking of dogs earlier, talking about some dog stocks. The dash for trash, right? He was way earlier on it than I was, and it worked for him better than me. And let's talk about this dash for trash because Kenny loves playing in this pile, in this trash heap, and they've been working for him. So let's bring him on the show right now. And I'm not going to run a bumper. I'm just going to bring you on, Kenny. Kenny, what's going on, man?
Oh, no bumpers. I don't get my special graphic. I'll do it myself. The illusion is real. Hi, everybody.
Ladies and gentlemen, welcome the Warlock to the show.
Appreciate it.
I'm surprised that you're not like at a concert in Las Vegas or at the Super Bowl. You've been gallivanting quite a bit.
Like you in Vegas an awful lot, yeah.
Yeah, I'm actually have to go back, but I've been flying around going to see the last of the schools my daughter wants to go to. I have an 18-year-old daughter now, which is kind of frightening. We just got back from Georgia, Clemson. They're in Florida right now, so they're checking out FSU. And we got one more. So if any Wisconsin fans out there, let me know about Wisconsin because it's still on the list. But we're trying to whittle it down. Yeah.
Are you only taking her to party schools? Is that what's going on here? You got Wisconsin, FSU, like any schools where there's going to be some classes?
I don't know. But Clemson was kind of a blah town, but Georgia was ridiculous.
Really UGA?
Yeah.
So. Really good school, right?
Is that Athens? What is that?
Yeah, Athens. Okay. Yeah, I vote Georgia. Yeah, I like it. We like Virginia Tech too. It's really nice. Also, she did well. She made most of the schools she wanted to go to. But
dude, how is your daughter so smart?
I don't know. It's my dad. It's my dad gene.
Oh. Got it.
Yeah.
All right, Kenny.
Yeah, man.
Victory lap time.
Yeah, so listen, Carvana, phenomenal. I mean, this is coming out again. You guys ask me why I love being bearish. It's for Carvana moments. What I've learned from getting my ass kicked in 2012 and 2013 fighting the market is that now I get it. I get it. I'm not going to go short any more stocks that are under $10. And when they were chirping about this still as a short, and I'm looking at this chart, that's that 3-year chart. I don't know if you guys have my charts up, but every good stock I found coming out of the trash heap came off these 3-year VWAP breaks. So that last one I gave you was the CCC. That was the one I really liked because it was a biotech stock that had just reported numbers and it didn't get destroyed. Most biotech stocks don't trade on their earnings anyway. It's more like, research and development. But this stock looked just like the Carvana trade, which just looked like the path. So I've been just sticking to the same chart over and over and over again. And suddenly I'm in 9, 12 positions. And I'm thinking, I guess I'm a bull now. I mean, what's going on? But every one of these dash for trash stocks have been working. And, we just keep buying them. Right now, we're looking at this NVTS. Look at this one. This is very interesting. I never heard. I mean, it's very, very rare that I haven't heard of a semiconductor stock because I've been trading these since the 90s. This stock looks really interesting. Just reported earnings.
It's a small cap stock, so
yeah,
you can't hear of all of them, Kenny.
Right. But
this is tiny.
This one had some contracts. Again, I'm not a big fan of knowing exactly what the stock does, but somebody that tipped me off to a company called Credo, which has done pretty well, said this is another interesting looking company. So I was like, cool. Company fundamentals meets technicals. I like it. We started buying this a couple of days ago. We sold some here because 5 got us $750 already. I'm looking to buy the pullback on this stock. This looks really, really, really interesting, because if it could get over the 750 and the 820, you got $10 written all over this thing. And in this market, these are the kind of stocks that go up 20, 30, 40, 50%, just like that JMIA that I gave you coming off the trash heap. JMIA. I mean,
this is it's the Amazon of Africa.
Exactly.
The Amazon of Africa. I'll never forget this one. The Amazon of Africa.
Just absolutely amazing.
Everybody knows that. It's a piece of
every
shit,
single one of these charts is exactly the same. So that's why it's like, forget about being bogged down knowing what these companies do. I'm just buying letters and numbers like SOUN. I don't even know what this one was. Apparently, everybody on earth knows about this stock except me.
Come on, Kenny.
And I just saw the chart. I was like, hey, I'm a fan. I don't know what it is, but let's go.
Yeah, so, that was because NVIDIA owns a whole bunch. That's why.
Oh, is that what it is?
Yeah.
That was another one with NNOX. They announced that they had a stake in
Hold
that
on, let me slow you down. Let me slow you down for a second. You started with Carvana. And Carvana, as we like to joke around here, but like serious, Carvana's like the poster child of the high short interest names. It's the blue chip of the high short interest names. Like, of the junk, this is the poster child. So if Carvana's working, most likely you could look at a lot of other junky names with high short interest. Right. They're probably doing really well also. So if you're looking for, short squeezes and you're looking to take advantage of mean reversions and junky names, like using Carvana as like your Dow Jones Industrial Average of that group has been very advantageous for us.
Absolutely. You're nailing it. It's actually the risk on stock. So when Carvana's weakish, the market was overall weakish. And when this thing starts springing back to life, you knew it was time to go crazy. I mean, for God's sakes, Kodak came back yesterday. I mean, what's going on? We are really scraping the bottom of the barrel. The only stocks that haven't popped yet are the weed stocks. So, again.
No, Kenny, that's not even true. The weed stocks.
The MJ index, I look at those indexes, the old school, the Tilrays, the Tilrays.
All right, fine.
When Tilray comes back, that's when the bull market's over. It's like there's got to be one of those names. When this stock comes back, it's got to be a sign. But right now, volatility, the UVXYs are still going down. There is zero reason to be bearish. And, again, just like JC's always saying, no one's buying low and selling high. You're buying high and selling higher. When the market starts going down, we'll start shorting again. And
nobody's buying low and selling high successfully. You see, people are attempting to do so.
Right. So when the market turns, you'll see the difference. Every dip won't be bought. They'll start selling good news. Things will change, and you'll see it. Just start shorting when we actually start going down. It's a lesson. It's hard for me as a bear. I love shorting the market, but right now, people say, hey, how high could we go? I know that conversation you would have. Why can't we go up another 10% from here, then finally pull back? So I'm looking at the Qs going to 470 at this point, which is insane.
The S&P 500 could triple from here. We could be a 1,500 S&P 500 by the election. I mean,
and you laugh, but why not?
There's no reason why not.
Right.
There's no reason at all why not. So I think a great thing if you're looking for a correction, if you're looking to add to bearish bets, you have to see stocks going down. We have mathematically, we're just talking about with Grant. Mathematically, you can't have a market correction without the prices of stocks falling.
Yeah, it's crazy.
So
but when it happens, I hope it's not an overnight thing, like a news-driven, collapse when we wake up. Oh no, what's going on? I hope it's organic and we're able to trade it. But
news tends to follow the direction of prices. So if prices keep going up, the news is probably going to be bullish. If you start to see prices start to fall, you start to see a lot of downtrends, then chances are any overnight news is going to be bearish. The market has you've been at this for quite some time. The market has a good way of sniffing this stuff out.
Right.
The market was falling before 9/11, remember?
True.
The market was falling. The dot-com bubble peaked. The market had already been falling for quite some time. The 1987 crash, the market was in a downtrend. Like, bad things happen in downtrends.
It's true. Absolutely. And right now, I mean, I got to wear a straitjacket almost every day, and I dip every once in a while. I try to short something and I just get annihilated. So you know what? I just take a break from it. Just like this SOUN. This is the trade that I'm in right now. So while I'm trading live while we're sitting here, this is my bread and butter. I don't care what the stock is. They reported earnings. It dips, gets back over that little blue line, which is the VWAP. We buy it. And we use those prior candles as our stop. So a little double bottom there at 565. We bought the stock at 585. And now you start selling here a little bit at 6.25. Old school trading, man. This is what I used to do. I used to take some money off the table on my day trade and just throw it into the queues. Now I'm taking money off the day trades and just throwing it into this junk, like the Jumamas and the Carvanas and stuff like this. And it's been working. So when it stops working, we'll know. And again, Strazza, my man, gave me another one with the GOTU. He's right there with me with all this junk that's been moving.
Yep.
Phenomenal break from 5, got a 750 on that one. So the action is here. This is the best trading I've seen ever in my life, and I've been trading since basically 97.
You've said that 2 or 3 times in a row.
I know
now.
you say
it
that.
only gets
You
better.
keep saying that.
telling
You keep saying that.
It
Kenny,
only keeps getting
hold
better.
on.
That's why it's so amazing. That's
Kenny,
why.
why are
that's-
you?
That's
Why
why
are
I'm
you
so
only looking? Why are you only
excited
looking
still.
at equities? Why aren't you trading cryptos?
Well, hey, listen, I have crypto. I mean,
Yeah.
I bought it like I was at a donut shop back, in 2017, 2018. I was like, ooh, what's Ripple? I like the Grateful Dead. I'm in. Doggy Coin before it was Doge. I'm in. I bought Bitcoin at 8,500 because a kid came to my office one day. He said, hey, I'm in Bitcoin from 600. Let's go party. And he showed up at my office in a limousine with two girls and a bottle of vodka and lots of sushi. And I was like, I love crypto. This is great. Next thing you know, I own some crypto and I don't even look at it.
Now that's funny.
Your life is ridiculous.
Your life is ridiculous. Kenny, but what about like the alts? There's like all these junky stocks that you're talking about. They got that in the old blocking chain.
Oh man, I'm in the junkiest. I bought something called Algo X because it was called Algo X. I think Scaramouche was talking about it at 250. So at
wonderful.
9 cents, I was like, you know what? I'm in. How can it go wrong, right? And then next thing you know, it's up 300%. So I mean, it's just funny. I mean, right now, let's buy some Kodak together. Right now,
Every time Scaramucci says Harvard Law, you take a swig.
Oh my God! But I don't know what his story is. But I just bought some Kodak right here, baby. Let's go.
Judd TV says, "Holy shit, I like this guy." It's talking about you, I think. Kenny Glick.
Kenny, for those who don't know, Kenny you are OG, Kenny. Like people don't know.
The system that you trade on, I built it. I traded with Chris Walken back in '87. It's crazy. Time is flying.
Kenny, like the best dumpster diver that I know, right? Kenny's
the most bullish perma bear on the planet. Kenny Glick, ladies and gentlemen.
Definitely.
Kenny
All right,
Glick.
good luck today. I'll see you guys every morning soon, so you'll be able to trade with me for an hour and a half or an hour.
This is going to be fun. It's going to be fun.
Warlock.
All right, good luck, you guys. Thanks for having me on.
I'll drop his Twitter in the chat for you, Ravi. 1 second. It's
I thought I had a good story about how I
Big
first
Radio
started
or
buying
something.
crypto back in 2014. Kenny's story is way better.
Yeah.
I got
It's
given
the
my
Warlock.
first Bitcoin as a gift, kind of. A guy showed up in a limo with some girls and sushi. That's a better story.
I didn't even know. I didn't realize Kenny had an office. I thought
Kenny used to have an office down on Broadway.
I thought he traded
right by
in his
the pool.
mom's basement.
No, Kenny's old, dude. Kenny looks young. Kenny's like mid-50s.
I know. Kenny looks very healthy.
He has an 18-year-old daughter.
Yeah.
Kenny's not young, but Kenny used to have an office down on Broadway, right across the street from the Bull, down in Fidei.
Yeah. Larry Thompson, I'd lose money and still be happy with Kenny. Yeah, that's kind of the idea. I mean, that's not the idea, obviously, but yeah, Kenny's somebody that you definitely want to be
some
around.
of the bits he used to do on YouTube, like he would stand right in front on the Federal Hall across the street from the New York Stock Exchange, dressed as Jesus Christ.
Yeah, you know what? Kenny was I think he's probably a little bit. He was ahead of his time. Unfortunately, I think
He was the original Wall Street Jesus.
I think if like
There've been
TikTok,
many Wall Street Jesuses since then, but he was the OG.
if like TikTok and them were around like 15 years ago, Kenny would be like huge. Right?
And he would be DJ Khaled, the DJ Khaled of the market.
Right.
Riding around in jet skis on the Hudson River.
For sure. All right. Since you mentioned Apple, JC, it had been a couple of days since I looked at it, and you're right, very impressive that it's holding the 180. You know what I find interesting too is that there was a number of quote unquote bearish headlines that you can throw at Apple's way, and the stock has been shrugging it off, or at least holding the line, right? So I just wonder if these, again, bearish headlines were sort of like the bottom.
What's so bearish? What kind of bearish
You know,
headlines?
Warren Buffett selling Apple, right? He sold what, like 1% of his Apple stake.
So that's a wash.
They're shutting down the Apple car that never was after 10 years.
Nobody even knew that was happening. What else you got?
No, they did know. People knew it was.
Is it bad news that they're shutting down a project that never worked?
I'm saying it could be construed as like the headlines would be seemingly negative. Warren Buffett sells Apple.
No, a negative headline for Apple would be like Tim Cook accounting fraud. No.
I'm talking about headlines that like read negative, but in reality aren't negative, right? Like
both of those are nothing. What else you got?
No, that's my point. That's my point exactly. These are nothing headlines, but they read negative, right? So in the same way, it's sort of like it's like the magazine cover indicator, just in a different form, right? So I'm interested in Apple. I'm not buying it. I'm not going to buy it here, but this 180 level is very intriguing. So let's see how it dances around this.
Stock market Mike talking about 42% Apple. He owns nowhere near 42% of his portfolio's Apple. It's less than half that.
Oh my God. How many times do you have to go over this? He's talking about the public portfolio.
Okay, but the public portfolio is not Warren Buffett. The public portfolio is a third of his portfolio.
We do this every quarter.
No, people get very confused. They're like, oh, Berkshire Hathaway is half Apple. No, it's nowhere near that.
Thank you, James.
It's like 40% of his public portfolio, which is a third of the portfolio. So he doesn't own nearly as much Apple as people make it seem to be.
Apple headline on Yahoo Finance. Apple has stopped thinking different. It joined the AI herd. Oh no! Apple's lost their originality. Sell the stock. Anyway, let's move on here. A couple stocks on my radar today. New York Community Bank, JC. Some internal control problems, some commercial real estate problems. The CEO, I think, is on leave now. So, shocker. I know you're stunned. But NYCB.
What did I just say? Hold on. What did I literally just say? Bad news comes out in the direction of the trend.
I know. Stunning.
This is just another, example number 6,297. Right?
I know. Speaking of accounting problems, Archer Daniels Midland is having a thing as well. They delay their annual report. Some accounting irregularities there. I think we talked about this. Recently. Maybe not. This is from like a month ago. The DOJ was probing them, so not new news there. Dell is your big winner of the day, up 28% on their earnings report. They said the magic words, JC, which are AI demand. So, the EPS was higher, the revenue was higher, but the AI demand is what the street likes there. So.
And this is a great example of risk management. I mean, I was looking for this thing to break down, looking for those momentum divergences. It never broke, right? Like, this is why you don't do that, right? This is why you don't short things that are not breaking down, right? I'm like, this thing's rolling over. This thing's going to fall apart. It didn't. I've also been saying the same thing about Apple. It hasn't.
It's trying. Right? It's trying, but trying and doing are two different
things. The difference. Apple's still trying to break down. Dell definitely for weeks now has not broken down, right?
Yeah. Okay. NetApp, the other big winner of the day, of 22% on their report, beat across the board. Earnings guidance, it was all good. 22. Yeah, there we go. NetApp. So looking nice here today. What else did I have? Oh, I missed this headline the other day. Speaking of trash, JC, but Oprah, I don't know if you saw this, is leaving the board of Weight Watchers. So WW, good night, probably to them.
I just like it when the sell side upgrades Weight Watchers to overweight.
They're not going. No one's gonna do that ever again. JC
gets me every time. Time.
There will never be an upgrade to overweight and Weight Watchers ever. Forever.
Here's PK talking about, is this why JC shorted Dow? No, this is why you don't short. That's why you don't short stocks that are making all-time highs, because something like this can happen, right? If you're going to do something like this, I'd rather do it in the options market. That's what we were looking to do. Never broke down, so we never
Yeah.
did anything. But this is
At
why
least
you
you
don't
can-
do that.
At
Good
least
example,
you can control,
PK.
you can control your risk better with the options. I was looking at Zscaler as well, down 10% on their report. Didn't look too close into the numbers. Let's see here. What is not good here? I don't know. Something's not good. Clearly, I don't know what it is, but because the headline was okay, but I don't know. I'm not gonna look too much into this. But yeah, down 10%. Like I said, so I don't know. That's kind of it on the news front. Not much going on. It is Friday. Tends to be a little quieter. Yeah, that's pretty much it. Interesting. Oh yeah. Speaking of zeros, Fisker going concern. That's a zero. FSR. Good night to you guys. All right, 9:47. Let's bring on Alfonso. Alfonso, you here? think he's here.
Fonzie,
Bring him on.
chart.
Hey, guys. How's it going?
Oh yeah.
Chart Ninja in the house. Want to do a quick little rundown. Dow futures down 70 points this morning. S&P futures flat. Nasdaq futures up a little bit, about 26 points, about 15 basis points. 30-year bond futures down almost over 0.5%. Silver flat, copper flat, gold flat. Oil up 2% this morning, with the dollar up, and the U.S. 10-year yield up a ton, back up towards 4.3%. So that's a quick little rundown for the market. Dow down almost 100 points this morning. Fonz, welcome to March. What's on your mind?
Thank you for having me. Another week. So I mean, in this week we mentioned some biotechs in our internal meeting. So it came to my mind. Remember the culprits from the last bear market in 2021? Biotech, IPO index,
Chinese internet,
online retail. So this week we saw like a huge breakout in biotech from this reversal pattern. So I wanted to take a look at these areas that have been lagging. So let's start with biotech. Nice base breakout here. The other one is the IPO. All these charts, more or less.
Look at that.
The longer the collapse, the bigger the collapse, the longer it takes to repair. So now we are seeing these laggard groups breaking out from these reversal patterns. The question is, are they going to hold these breakouts or not? Right? So if we see these breakouts to hold, it's like a probably it's a good thing for the market.
It's not risk off. Fonz, this IPO index, it looks exactly like Robinhood, doesn't it?
Yeah. I mean, Robinhood just break out to new highs, to new 52-week highs. So I'm looking at these areas. Here we have only retail, similar picture. It seems to be breaking out. I like it above 55. Here is traditional retail, solid breakout above 74, piercing through this 38.2%.
This chart's equally weighted for those who are unaware.
Yeah,
this is equally weighted retail. It's a big deal.
Yeah. So this group looks very good. Mobile payments too. Look at that base. We saw like new lows in October and November of last year. It recovered and now it's breaking out. So all these laggard groups are catching a bid. That's risk on signals for the market. But
hey, real fast, can I interrupt you? Does anyone want to guess what the top holding in XRT is?
It's equally weighted, so it doesn't matter.
The top holding is 2.3%. The second largest holding is 2.03. So it's
because they rebalance every now and then. So what is it? Abercrombie and Fitch probably because
Abercrombie is number 2. Number 1 would be Carvana, one and only.
Yeah, but that's only because
I know why it
is.
is. I'm just pointing out something fun.
Oh, yeah, but it's an equally weighted index.
Moving on. Sorry, Fonz. Continue.
It's intended to be an equally weighted index, obviously, so they rebalance accordingly. So
I understand that.
Yeah.
Keep going, Fonz. Sorry.
I mean, and even e-commerce, making new highs from this basis. So we have been seeing this kind of groups that has been laggards for a long time, resolving from their reversal patterns. So now, I think, in my opinion, new uptrends are underway as long as these groups hold their breakouts. So that's a positive sign for the markets.
A lot to like here.
I like where you're at, like where your head is at. A lot of these things look exactly the same, Fonz.
Yeah. The chart looks exactly the same. It's the same.
Multi-year bearish to bullish reversals, right?
Yep.
And these were the what Fonz started out saying is that a lot of these names were the culprits in the last bear market. These were the first ones to start falling in 21. These were the ones that got destroyed the most. So the fact that they've been basing for a couple of years now are now resolving higher all simultaneously is a major theme going on underneath the surface.
Exactly. Well said, JC.
Fonz, anything you don't like right now? I'm sure.
Not
like
actually.
Grant's trying to short gold.
Well, I mean, gold miners breaking to new ultimate lows on a relative basis, not good. I think Grant made a good point. But yeah, I will say that gold miners have been showing relative weakness, so I'm not with that kind of industry group right now. I don't like it.
All right.
You want a short Apple if it breaks 180 or what?
For that trade, I really like the relative weakness from Apple, so that caught my attention. So if you really want to short Apple, I think that's like your biggest argument to do it. Definitely.
Yeah.
But it's not going down yet.
I've been very impressed. It hasn't been going down on an absolute basis. On a relative basis, it makes new lows every day.
That's right.
So that's what Fonz is saying. That's what makes him
the
so
absolute basis is what matters. That's what people buy and sell.
But on a relative basis, it leads.
Yeah.
Like, for example, all these banks that disappeared in 2008, they were rolling over on a relative basis since 2006.
Sure.
Right? The market was already sniffing that out. You'll see relative strength rolling over first, and then you'll see it on an absolute basis. Apple below 180 is that,
Yeah. All right.
That's right.
I agree. There's reasons not to like Apple, but one of them is not that
it's because of their car. They don't have the car.
It is
all over.
It's all over.
They can't even innovate anymore, Spencer.
Hey, that's been the knock on Apple for 10 years. They can't innovate. And then they did innovate with services and wearables.
Going up.
Just saying. All right. You'll do some recess. Get out.
Yeah, stick around, Alphonse. Stick around. One of the things I've been thinking about is that during the pandemic, a lot of people started like smoking things, and like slow cooking. Like everybody became like a grill master, like a slow cooking.
Oh, like barbecue smoking.
Yeah, get your head out of the gutter, Spencer.
I don't know. I don't know what you're talking about. You said smoking.
Yeah. Head out of the gutter. We're talking about smoking meat. Smoking meat.
Yes.
Everybody during the pandemic got into it, myself included. Since life has gotten back to normal, some of us have kind of ignored that side of the equation. I would encourage everyone to start smoking things. Start smoking them. Low and slow, Spencer. Low and slow.
Yeah. At some point in the next couple of months, I'm going to go out and invest in some kind of a smoker, grill, barbecue.
You want the green egg, Spencer. The green egg.
I've heard about this green egg. People talk about this green egg like it's the holy grail of barbecue.
It's the ceramic. It's like this Japanese ceramic. There's a name for it. If anybody from Georgia wants to weigh in, it's a big Georgia thing.
If anyone has recommendations, I'm dead serious. For the first time in my life, I'm living not in an apartment, right? And I actually have the ability to do stuff outside. Yeah. So I'm all for recommendations. If you have a barbecue, a smoker, grill, whatever.
Green egg. It's this special Japanese ceramic. I forgot the name. It's a thing. I'm telling you.
All right, send it my way. My recess is, everybody, welcome to March, which is by far the best month of the sports calendar. In no particular order, we've got spring training, right? Baseball is back. Hope springs eternal. We've got the home stretch for the NBA and the NHL. We've got the build up to the NFL draft. We have the beginning of the Formula One season, which starts today. Actually, I think it kind of already started this weekend. And then, of course, the coup de grace, the creme de la creme, March Madness, the best sports event on the calendar. I am so excited. I love March. I watch more sports during March than I do during any other month of the year. It is the best, and I love March. So welcome to March, everyone. It's the best.
I like it.
Hans doesn't know what you're talking about.
I don't care.
He's like,
don't forget about Champions League.
What is this Harry Gringo talking about over here?
Oh, and the Champions League, the home stretch for the. Thank you very much, Fonz. We got like a 3-team race this year in the Champions League, so we're coming down the stretch there too, and it's tight. So yes, I love March. It's the best.
I don't know what Champions League you mean, but I'm talking about soccer in Europe.
Yeah, isn't there like a 3-team? It's like we got what, Arsenal, Liverpool, what is
Premier League?
Yeah,
I'm talking about the Premier League. Sorry, Premier League. Okay. My bad.
That's all year. You know?
Yeah. But isn't the season almost over?
No, like in May, June.
All right, a couple months.
Yeah. What about the Olympics? Venezuela got a soccer team in the Olympics or what?
I don't think so. No, not soccer. Not soccer team.
Definitely. What are Venezuelans good at? Baseball.
We won the Caribbean series this year.
Yeah.
So that's good.
Venezuelans love baseball. You guys are very good at that.
You got baseball, arepas,
pequeños,
empanadas. That's right. All my favorite things.
Yeah, I know.
That's right. All right. I think that's where we'll leave it today. Steve Strazza will be back next week. So we'll have the full crew back again. Thanks to our guest today. Thanks to Grant. Thanks to Kenny. Thanks to Alfonso. Thanks to all of you in our chat for hanging out. If you want to do me a quick favor and hit the like button, you can subscribe to our channel, get notified when we go live. Also, I did drop the link in the chat. It's pinned to the top of our chat. If you missed yesterday's crypto event, you can watch the replay. Just click on that link, enter your email, and it'll be emailed directly to you. And it's totally free. So there is the link in the chat. Check it out. JC was rocking it with Louis. It was good stuff.
Rocking it.
Yep. So we got we're going to be recording another What the Fic today, but as far as the live stuff, that'll be a wrap for the channel. So go make some money, and we'll see you guys next week.
Adios.
Bye, guys.
See ya.
Run it. I can't take no loss. I don't even know what it costs.